Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the little euphoria around the US Treasury yields going up has subsided, right? You see these little glitches in the market and it's sort of a bit of instability and then it comes back to normality. And it usually takes just a little bit of data. So US weekly jobless claims, equipment spending, etc., shows that the US economy is sort of slowing, right? And that's seen the dollar just curb that recent rally in the yields in the US Treasuries. And don't get too caught up here on some of the news, right? We have the PCE price index numbers out today. It is an inflation number, but they're sort of building it up into something massive. It's not as big as the inflation number. It's an extra number that tells us a bit more about what's going on. And the way the week's been, sure, it will have major interest, but it's not the be all to end all, right? So just be aware of that. You can get misled by what some of the what news is released. Now, the US Treasury yields have backed off, especially that sort of 5-year, which was sort of driving a little bit of panic that higher interest rates in the US would be a longer term thing. It sort of lasted a day, right? So let's just be aware of that. And when you come in and start looking at the major trading instruments, right, we're back to sort of normal sort of levels. As I said, that little spike in the dollar, short term, right? And I've been saying this for the last couple of weeks. The markets are super fickle at the moment. The slightest bit of shift in the data, and then they're off to the races, sort of saying the dollar's going to go through the roof or interest rates are high, and then weaker numbers, and it's the other way around. So just focus on what you can see. Try and be objective. Dollar Swiss, okay, it is going up, okay, which, you think, well, okay, why is euro not going down, right? There's been a bit of an imbalance with euro Swiss and what the Swiss National Bank are doing. We do have the COF indicator out today, which is a decent number for the Swissy. Now, just looking at sort of the price action here on the major currency pairs, particularly euro and sterling, sort of sucks, right? You look at the Aussie, we had those strong inflation numbers. They've been pushed aside. It's just been going up and down. Kiwi dropped on some business activity numbers, but sort of jamming away. If anything, it does look like it's sort of in a downtrend. And like if you want to get something a little bit trickier to trade, oil, okay, sort of all over the shop. At the moment, it's back to almost $82. Not much movement in dollar CAD, but you'd think it's got to start trading lower if oil continues to rally. And our good friend dollar yen, well, it just keeps banging away to the top side, right? Regardless of what the BOJ say, no one is listening, and they're going to put their hands in their pockets if they want to get some movement. Now, where are the sort of focal points today? Now, we do have a bunch of numbers out of Japan. These numbers here, right, not worth looking at, right? So the like when you look at the numbers and the CPI and unemployment, you're like, traders would start frothing usually if this was in other economies, but the Japanese numbers are not impacting. Now, that doesn't mean I don't want to brush it aside 100%. There could be a chance for some sort of variable numbers here. You'd be looking at the Nikkei to see what's going on there and then potentially looking for a trade. But you know what? The interest rate differential that is pushing the yen down, the dollar up, that's a real thing. And it isn't changing just at the moment. Now, you've got some numbers out of Australia, not really that important. Construction numbers out of Japan, not important. Import prices out of Germany, not important. You come down here to the GDP numbers, actually out of the UK. Well, these are important, right? So they give us a bit more of a look around what's happening in the underbelly of the UK market. You got that COF indicator, excuse me, out of Switzerland. It'd be good to see what they've been up to. If there's the official reserve assets, I don't know if the Swiss National Bank publishes what they've been doing in the markets, but it'd be interesting to see. I think they've been up to something. Now, German unemployment figures, definitely have a look at those. If there's any sort of blowouts, once again, the German economy and the way the Germans sort of build things, they are built reliable. And I tell you what, there's not much budge room here in the unemployment rate in Germany. Very consistent, all their numbers, in fact. Now we get into the numbers where things may sort of come into play, right? And we're talking the North American session. You've got the GDP numbers here out of Canada. Okay, let's just cover that first. But then you've got the the PCE price index month on month and year on year. Now, this is, as I said, it is an inflation number. It isn't the biggest one ever. And so don't get sort of caught up in the hype. Let's just focus on the year on year numbers. Prior number was 2.8. They are expecting 2.6. Now, this is important, right? We want to see lower numbers. You've got the range there, and that's where the movement's going to be. So keep an eye on that 2.6%. Personal income and consumption, they are two extra variables there as well that you've got to consider. But the price index number there, 2.6, is the main game, right? It's a shame that it's not coming out now. It'd be great to sort of get your hands on it and trade for the duration of the next 24 hours. As it is, it comes out. You've got about 6 or 8 hours to have a look around and see if anything moves. So what ideally, if you're looking for a move to the downside, right, which it's got to be coming, right? Like those weaker US CPI numbers, the minimum here, 2.4. If we got a number below 2.4 in this PCE price index number, right, the dollar's going to get hit hard. US equities will rally, right? It's very simple. And on the other side of the spectrum, if we got a number above 2.8, right, well, the US dollar is going to take off, okay? Stronger dollar, weaker equity markets, and that's it, right? It all comes down, once again, to the pole, 2.6, but keep a close eye on that range. That's where the action's going to be. Outside of that, you know what? There's a bit of range-bound trading sort of opportunities, right? And you can lose confidence in the market around a lack of consistency in price action. But something like it's easy to say in hindsight, I got to say as well. Like you can see here, is anything going to happen before the PCE price index? I'd say not. So there's a chance for a bit of range-bound activity. But what you want to do is come back and start tuning up your charts to the recent movements. Okay, make sure you've got the your support and resistance levels drawn on the right levels, and then you're in a position to sort of piece it together. Now, don't forget UK GDP numbers, Euro. Well, Euro's going to be waiting for those German unemployment numbers as well as the US PCE price index numbers. So a lot of things are on hold. Good chance potentially for a bit of a range-bound trade during the day. Outside of that, keep an eye on the yen. Maybe have a look at those yen numbers if you're a little bit sort of lost for things to do. And that's where you can sort of piece it together today, right? It's one of those discombobulated weeks where we haven't had a lot of synergy across the markets. The US Treasury yields have been sort of dominating. Now they've sort of just quietened down and gone back into their box. Now it comes back to the equity markets. We'll be looking at the US numbers for that, and we'll see what happens with the US dollar across the board once those numbers are released. All right, guys, good luck. Happy trading. Cheerio.